Hello guys, welcome to Admiral Markets webinar. Let's see, today we will talk about trailing stop management and how we can secure our trades while we are out of our trading platform. Before I begin with the actual webinar, our standard is disclaimer. Online education materials are developed by Admiral Markets Estonia for a global audience, and to get a corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. There is disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part, Admiral Markets UK Ltd takes no responsibility for information accuracy. This is my analysis and my opinion, and it's not the actual suggestion for the trade. These are not WK's opinions. This is a globaluse.com website. Forex is risky business, and this webinar is for informational, educational purposes only. So today's agenda: what is a stop loss? Advantages and disadvantages. Trailing stop, which we will refer to as TS. Trailing stop and Admiral Market Supreme Edition advantage, and Swiss Army Expert Advisor. Of course, if you are interested to get this free expert advisor, Swiss Army, you can contact me after the webinar, and I will send you documentation and expert advisor itself. So, as always, just send a request to my email. So what is a stop loss? We all know what a stop loss is, and we all use stop loss, I hope. And stop loss is basically an order which limits investors' potential loss on a forex position. It's also known as stop order. Okay, stop loss is basically the same what we do, but the platform does it behind the curtain. When we close a sell order, it's an automatic buy into the market. And when we close buy order, it's automatic sell into the market. So that is exactly what platform does when stop order is hit. Stop loss order is executed at a given price, but if the market is very volatile, you can experience so-called slippage. Okay. Stop loss means stopping the loss. Okay, it means stopping the loss. That's why it's called stop loss. So your loss should be stopped, no further losses. That's why we call it a stop loss. Okay. Now, advantages of using stop loss. The first and main advantage is that we are protecting our equity. Okay. Not using it on leverage trades can end our career in forex market. Quick exit of the trade when it goes below or touches a stop loss at the peace of mind. Okay, it's disconnection proof. Just imagine that you are in a trade and what happens is that you basically go out, but you didn't put your stop loss. Some nasty things can happen. You can suffer from a big drawdown, and the worst which can happen is your account may be depleted because you don't have a stop loss. It's also platform malfunctioning proof. If something happens to your PC or Mac, wherever you trade, it doesn't matter. The orders are automatically placed on a server, so it won't affect your trading. Disadvantages are that it's psychological failure when stop loss hits. We usually tend to revenge our trades. Okay, we talked about revenge trades, and a lot of traders just try to revenge trade. What does it mean? For example, that means that let's say that you have a long on cable, for example, 5600, and your stop loss is 5680. Your stop loss is hit. What a lot of traders tend to do is they automatically place a sell order at 56.79 once this stop loss has been hit. and it's called revenge trading. It's one form of revenge trades, okay? Because you think that if your stop losses hit, the price will continue down, and usually you don't use the same leverage trade. Instead, for example, if you use 0.3 on original position, for revenge position you would use 0.6 just to quickly revenge your trade. And usually what happens is the price will hit this level, then it can go couple of pips down, then it can quickly go to the upside again. So it's just a psychological failure. It's not logical. You shouldn't do that. Okay. The question Kelly is asking: are there any risks using hedging instead of stop loss? Well, hedging. What is the point of hedging, Kelly? For example, if you use the same trade, GBP. For example, you use 1.5600 long and you open a short at the same position. What is the logic behind that? You have your stop loss. You don't have to hedge. The only thing is you're paying for additional commission, right? But what is the logic of same pair hedging when you have stop loss? I could never find any logic in that. Okay. Different stories, for example, you open long-term euro-dollar trade and you want to protect yourself by opening dollar Swissy short trade, right? Or let's say no short trade. I didn't express correctly. Euro-dollar long trade, for example, and dollar Swissy long trade, and basically you hedge your trade because, but still, one of those trades will go negative. Okay, it will go negative. So I don't see the point in hedging. Many traders say that it's better, and then when a new opportunity comes, you exit of the hedging positions. I never do that. I just never hedge. Okay, I use stop loss order. Stop loss order is basically you have your position at 5600. You place, for example, 5580 stop loss, and once the price reaches, the platform will automatically sell here and close your trade. So basically, why would you use hedging? Is not better for me, really, and I don't think so. I don't think so. My personal opinion is there is. How will you know when you should close your order, or I don't know which hedge you should go out? How can you know that? If you know when to place long or short, then you usually know where to place stop loss. I just cannot imagine that traders do not know where to place stop loss. The question, if I use hedging, do I get a margin call, or that will never happen if both trades are open? The only thing you can have some loss, Kellen, but the thing is, for example, if you're carrying the trade overnight and you pay for overnight trade, swap, it's called swap, okay? For example, if both long and both short positions are for example, have some negative fee, for example, 0.15, it will go slowly, okay? It will take some money from your account because you will be paying for overnight trade swap, okay? And the only thing you can have some losses is there, but effectively you will not be margin called if you use hedge, okay? uh, I don't use hedge, and to be honest, I'm against that kind of trading. But if someone knows how to use it and someone knows how to place hedge order, great. I am old school trader. I'm old school, but I imply new methods. And the thing is, I have never seen any logic behind placing a hedge trade if you know where to put your stop loss. Why would you why would you place a hedge? It's not logical to me, okay? Really, it's not logical to me. A question which I have: is it possible to use dynamic stop loss with indicator? If you refer to dynamic stop loss, yes, you can use it by Admiral Market Supreme Edition. I can show you that, okay, later. So you just need to download Admiral Markets, and you will have and you need to download Admiral Market Supreme Edition, and you can use just click of the left mouse button to dynamically change your stop loss. Okay, it's possible. The question: margin calls, does that happen often? I don't know if it happens often. If you trade by using low risk and you know the logic behind placing trades, you should never ever get margin call. Okay, so the thing is, let's get back to webinar, then we will talk about other questions. Okay, so disadvantages are psychological failure when stop loss hits and reverses. Okay, we mentioned that. And we know that it's a strictly I will use the opportunity to show you. Don't worry, guys. uh, Dynamic stop loss, whatever, just focus your attention now here. Okay, uh, do not revenge your trades. Okay, that is the most important part. If your stop loss is hit, good, just don't revenge your trade. Stop loss is okay. You shouldn't be very worried about your stop loss, because if you lose, you will not lose much if you know how to trade properly, because you created your risk margin. And if your risk margin is respected, why would you be fearful of stop loss? Okay, the problem is it can be placed in a wrong place time. If you're trading the news and you're placing too tight stop loss, it can be dangerous indeed. And so-called death of 1,000 cuts, okay? Constantly trading with small stop loss that gets hit each time, multiple times your position is open. For example, you want to trade and you put your stop loss of 10 pips, of 12 pips, and every time your stop loss is hit, you trade with low stop loss, with very small stop loss. That's not okay. You need to properly determine your stop loss. And if you don't do it, you will suffer from the death of 1,000 cuts. Okay? And that's dangerous. Your account will suffer. Okay? So trailing stop, or TS, is a built-in option of client terminal designed for adjusting a stop loss order level automatically by a specified amount of points. Okay? A trailing stop is a way to automatically protect yourself from a positional drawdown while locking the profit. Setting the stop in a positive territory. Okay? So trailing stop is a way to automatically protect yourself from a positional drawdown while locking the profit. Okay, so you're locking in the profit, and that way you're setting your stop in a positive territory. Let's refer to today's, for example, to today's example of my analysis. Okay, I will show you the analysis. I hope that you made money. And this is a good example now for a trailing stop, but I will use also other example, of course. So today's dollar CAD, okay, where is my analysis here? Yeah, here. Okay, if you followed my analysis today, you would have been 80 pips in profit now. Okay, so 80 pips in profit. This was my analysis. Okay, dollar CAD. And POC1 was hit. Now the question, when you place trailing stop, where would you place your trailing stop? If you read my analysis carefully, then you could have noticed that I gave targets 30, 30, 31.00, but today we have also FOMC. Okay, FOMC. So most logical advice which I could have given you is once you're very close to L3, you can start using your stop. So now the price is 20, sorry, not L3, sorry, the break of 38.2, which exactly is close to L3. 38.2 is lying somewhere close to 29.60, okay? You don't see the chart. I don't know how you can see the chart. Oh, sorry, guys. I'm not sure what happened. How you can see the chart? Okay, screen is not showing. Ha, let me see. Let me check. Maybe it's my monitor. Okay, check it here. Do you see the screen now? Do you see my screen? It should be on the slide trailing stop. You cannot see the screen. Why? It's not. I'm sharing. Do you see the trailing stop slide? Slides. Okay, I cannot. Unfortunately, I cannot show you here, but I will use a MT4 platform to show you. Okay, just let's finish with these slides showing trailing stop what it is, and then I will switch to MT4 platform. So the thing is, you should set a stop in a positive territory. Once you go with 20, 30 pips of profit, if you see that the market is ranging, it doesn't have momentum, you should put your stop loss to break even plus 20 or 30, securing your initial trade. Okay. Now, there are a lot of approaches to use trailing stop. I will use some of the approaches. Okay. I will use some of the approaches and I will show you how you can handle those approaches with different tools. So, trailing stop is the main function is to increase the profit lock. So, you're locking the profits. You should follow the trend. Okay, it's always the best to apply trailing stop is to follow the trend. It's suitable for both intraday and investment. I know that some long-term traders are also protecting their trades by using stop loss, trailing stop. Manual trailing stop is the method which I prefer, okay? Now, we can use also dynamic trailing stop and AM Supreme Edition, which also helps us to stay in a positive territory. And we can also use trailing stop expert advisor, which I will show you. And if you're interested, I can send you, of course. You just need to send me a request to my email. It's Swiss Army Expert Advisor, and I will send you this Expert Advisor trailing stop and PDF. So, manual trailing stops is one of my favorite. It's called, that I use it frequently because I've been showing you a couple of times. It's called scalps into intraday position, okay? Because if you use this kind of trailing stop, you use it basically with the momentum, okay? You're using it with momentum. When you apply a momentum to your potential trade, there is a big possibility that your trade will be locked in a profit. So use hourly pivot points or ATR indicator with levels. I have sent you already hourly pivot point and ATR, so you should have it by now. Once the price is initially in the profit, for example, 10 pips, move stop loss to break even. Now I'm talking about scalps, and this logic can be also applied to intraday positions. So instead of locking in 10 pips, as you know how we do it on session recaps, if you see that there is no momentum, we are locking 20 pips of profit at least. At least. When the price reaches next support or resistance and breaks it by 3 to 5 pips, move stop loss to that particular support or resistance level. If the price proceeds to next level and breaks it, move stop loss again. So that is manual stop loss, and that way you're riding the momentum. So let's say that you have open your trade here. Your initial stop was here, okay? Your initial stop loss. Trade has moved 10 pips to your favor, but it reached important hourly pivot point. Now this is scalp trade example. Instead of booking 10 pips of profit, you can see that the trade is going up, 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 and up. So you decide to wait, okay? You decide to wait and you move your stop loss to break even. So instead of here, your initial stop is moved here, okay? Your stop loss is moved to break even. So now you are 10 pips of profit, but you're safe. You're safe. Now you're having so-called free ride. Okay. Now the price is going up, 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 and up. It went 16 pips in profit. Here. Now you can decide to move your stop loss here at this pivot point. So now you're basically locking your stop loss 10 pips in profit. It's called break even plus 10. So you have locked your 10 pips in profit. Now look here, this candle reached this resistance. So now instead of 10 pips in profit, your trade is 22 pips in profit. Now you can decide to move your stop loss here. And with Admiral Market Supreme Edition, you just need to move your stop loss like this. Let me show you the chart if I have it. I hope that my position is in profit. Yes, it's in profit, but I will show you how to use it. Okay, I will show you how to use it right now. So, okay, you see it here. Okay, yeah, I'm using Swiss Army stop loss. So, yeah, Admiral Markets, I will use it later. So, yes, okay, I will use it later. I have a short on Australian dollars, so it doesn't matter. So, the thing is, once you locked in your 20 pips of profit, you're again on a free ride. So you just need to move your stop loss here. So move your stop loss here and you will be locking your, instead of 10 pips, you could earn 20 pips by turning a scalp into intraday position. Okay? By turning a scalp into intraday position, which is very, very good, guys, how we do it. Very, very good. Okay? One thing I want to show you now is you can also do it. Okay, I will open mini terminal here. Okay, this is my screen now. You should see my chart. Do you see my chart, guys? Do you see this chart, Australian dollar mini terminal? Yes. Okay, so look at here. Stop loss is here, sell position is here. I can move my stop loss, guys, like this. So effectively now we are enjoying a free ride. What I can do, so this is one of the examples. This is what one of you guys asked me, how to secure the profits. Now look, this is great addition by Admiral Markets, okay? Great addition by Admiral Markets. You can do whatever you want, just great. You should always have Admiral Markets Supreme Edition. Okay, do you see Australian dollar? We can see the chart. How is it possible, guys? Do you see the chart now? Great, 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 excellent. You see the chart now. So you can do it like this. Okay, going here, okay, waiting for this line. Okay, let me wait now. Now the mouse is making some problems. Okay, like this. Okay, you just go like this. Okay, you see the arrows? Just put it like this. Now I want to look, for example, I want to look into some profits, and I want, because market is not moving, I want to secure some profits. Now I can do it manually. I can put my stop loss to 73.00, for example. Okay, now you see, effectively what I do is basically okay, I have locked in 15 pips of a profit. Okay, so you can do it also, as I said, by using this one. You see, it automatically moves. So one of traders asked me how to do it, and this is how you should do it. Very, very easy, okay? Okay, and okay, now stop loss has been hit. But you see, that is how you lock in your profits. Now let's see other examples, guys. Okay, where did we... Okay, you do see now, you should see the chart, the slides, which I was explaining, okay? Yes, Nikos is saying you can move normal stop loss with mouse. Yes, but there is another logic which you will use by applying Admiral Market Supreme Edition. I will show you that in next 15 minutes, so don't worry, okay? Don't worry, I will show you that. So we saw how we can lock in the profits, okay? We know how we can lock in profits, and we know that we can benefit from using Supreme Edition, at least for this period. I will return to Admiral Market Supreme Edition because it has a lot of features really to help your trading, okay? Okay, so guys, move your stop loss to break even after your 10 pips in a profit, okay? After you make 15 pips of profit, you can lock in 10 pips. Now you're riding a free momentum. You can ride a free momentum. It is how you do it, okay? Now, look at this example. Australian dollar 5-minute entry, okay? Your entry was here. Your initial stop was here, okay? Price breaks first target. So this was our first target. We don't take the profit, okay? We are not fast on taking a profit. We want to wait because there is momentum, okay? Apply trend lines, whatever, find momentum, okay? Find the momentum. Momentum is to the downside. Price breaks first target by 3 to 5 pips. Now we move our initial stop here. So we already secured profits. Now this is our second target. Price breaks our second target. We move our stop loss here. Isn't it? This is good logic. This is good logic, and it works. Because in one of the accounts, by applying this logic, I have made 40% of a profit. So it's good, it works, okay? So you just need to know that you shouldn't trade with big risk. You should always apply low risk trades. And sometimes when you apply low risk trades, you can really count on great winning trades because your stop loss can be higher. Your stop loss can be higher. Do you know, guys, do you remember when I made webinar, last session recap, when I told you to sell euro dollar at 1.1113? Now tell me how many of you took the short here, 1.1113 or 1.1100. Did any of you shorted euro dollar? Okay, Ayush Singh is saying I did. So only one of you took the short, and I told you that I expect euro dollar to go down. Now this is a good example because I want to tell you how you can secure your profits, guys. Okay, so none of you have taken our euro dollar trade, which is now 100 pips in profit. Okay, guys. Then Ayush, you're the only one who took this trade. As you remember, our stop loss was something like 70 pips from our entry price or 80 pips. If you use the logic, now you can lock in 90 pips of profit and you can wait for FOMC with a clear mind. Law is saying I did the 110 pips. Great, Law got 110 pips. Okay, that is actually great. Great. Okay, Law, 110 pips. Excellent. Carolyn is saying, I'm not comfortable with copying other traders. No problem, Carolyn. Of course, you want to do, and you should always do with your own analysis. But if your system, and for example, my logic is okay, then you can try to follow also my recommendations, because it's always best when your system and my trade setup show same thing, then you should win. And yes, of course, I always emphasize the fact that all traders should trade by themselves, and of course, that is why I'm there to help. If your system and my analysis show the same, then you have double confluence that your trade will be a winning one, right? So now, guys, if you're in euro dollar profit, you can lock your profits. FOMC is coming. I expect some strong reaction. We will see what will happen, but you can lock your profit. Now, manual trailing stop concept can be also applied on intraday charts. And every time price breaks pivot point with 5 plus 5 pips, we move the stop loss manually, okay? Manually. Pay attention to risk to reward and general win to loss percentage of the system or method. Carolyn is saying, I'm waiting for your new Heiken-Ashi strategy. Yes, there will be a new Heiken-Ashi strategy very soon. As soon as I get from my holiday and vacation, I will show you the strategy. What is the difference between MT4 training and yours? I will show you, just be patient. So, same concept of manual trailing stop can be applied on intraday charts. Every time price breaks pivot point of 5 plus 5 or more pips, we move the stop manually. Pay attention to risk to reward and general win to loss, because win to loss percentage of the system is always important. For example, if you use 20 pip target, 30 pip stop loss, you will always be in profit if your system is 70% accurate. Okay, at least 20 to 30. So it's not even 1-to-1. But if your system, if your method is 70 or 80% accurate, you will be on a winning side. Okay. Jen is asking for FOMC. Yes, I will tell you a few things about FOMC just when I finish with the webinar. So, for example, dollar yen trade. The entry was here after now moment buyers and double. This is a double confirmation for an entry. Okay, and entry was here. Initial stop loss 25 pips. Okay. The trade went here to our first profit target, which is L4. Pivot point was broken with 5 and more pips. Instead of leaving my stop loss here, okay, I move it here. So I locked good profit, something like 20 pips initially. Okay. Now, this trade has went with a good momentum. So that is why I'm saying momentum is always important. With good momentum, it hit 54. It broke 54. It went to 61. So now I have moved my stop loss here, and I was stopped out for 52, okay, 52 pips of profit. Okay. So this is good example of how you can ride momentum, even on 1 hour trades. Even on 1 hour trades, you can ride momentum. Okay. So guys, this is good. Okay. Harish is asking, do you have any method which has 70 to 80% of accuracy? It also depends on you. My Camarilla MACD, of course, is 70 to 80% accurate. Okay, and some of the methods I have been presenting to you, you should test it. They are also very accurate. But I only trade my Camarilla MACD, and currently I'm testing Heiken-Ashi strategy, which will be released in 2 versions, and you will be seeing it very soon. Okay, so yes, there are always good accurate methods. I always use Camarilla indicator, so Camarilla indicator is my favorite. For Heiken-Ashi, also I'm contemplating between Camarilla and pivot points, but Camarilla are also form of pivot points. Okay. Now let's see. Okay, one more question, then I will continue with the dynamic trailing stop, and I will show you how to do it with Admiral Markets terminal. Kellen is saying, I don't know why I'm always losing even with proven strategies. I guess I do not know how to do a proper testing. How I do testing of my methods? I don't say that you should do the same. I open a live account of $100 and I use very small lot size to test my system. And if I can make 20 to 30% in 3 to 4 months on $100 account, it's effectively 120, 130, it means that it's ready to go live. That is how I do it. Because sometimes demo trading can just fog your vision. If you can invest small amount of money in testing, do it. Okay, that is how I do it. And I usually invest in my own strategies, and I usually invest in my own time, and I invest and I teach traders how to do it. And the thing is, it always pays off. You need to invest in order to gain. Okay. So be patient, Kellen. You will find maybe your psychology is the problem. Okay. From September, guys, we will have a series of price action. We will be doing price action from the scratch. Price action and Heiken-Ashi combined webinars. So we will be doing it from scratch. I will be giving you free Heiken-Ashi strategy, and I will be teaching you price action from the scratch. So you should be, again, you should learn and you should make even more pips from September. So dynamic trailing stop. Remember that trailing stop has priority over stop loss. For example, if you set stop loss of 50 pips and trailing stop of 10, stop loss will be 10 pips from your price, 0.7325. And trade terminal needs to stay active. Okay. Okay. So that means if you set your stop loss of 50 and trailing stop of 10, platform will use trailing stop of 10. So you should always be aware of that. TS has priority over stop loss. So that is how you do it. Open your sell trade, for example. This is the example which I use today. So open your trade, click at the right, click left mouse button on the red spot here, and new dialog, web page dialog will open. So it's a window basically. If you click stop loss, you will be getting this window. So by clicking here, you will get this window. By clicking here, you will get this window. Then it allows you to set a fixed price, pips, fixed cash risk, percentage of equity, percentage of balance break even. Now guys, look how Admiral Markets platform is indeed supreme. So if you click stop loss, it will get you 6 different options for your stop loss. Fixed price, pip stop loss, fixed cash risk, percentage of equity, percentage of balance, break even. Okay? So use it to your advantage, guys. It's excellent add-on. Okay? And this is how you can manage your trade once you're in a trade. Percentage stop, break even stop once you're in a profit. Pip stop loss, fixed cash risk, fixed price, everything. Look at this now. Another window. Click on sell or buy, whatever you have your trade. Then another window will appear and another window, and that window will be this one. Click TS, which stands for trailing stop, and this window will appear. So it allows you to set your stop loss. Okay, trailing stop of how many pips. So it's very easy to use dynamic trailing stop. And I showed you also on live chart how you can move. So press your left mouse button and move your line. Okay, so this is how you can use it, dynamic trailing stop, by using Admiral Markets platform. And finally, guys, trailing stop expert advisor by Swiss Army. It's free and you can ask for it. I will send you documentation. And this trailing stop is also doing a lot of things. I personally just use it for testing. I didn't use it because I use Admiral Market Supreme Edition. To be frank with you, it's enough. Admiral Market Supreme is enough for me. But if you want to use other pairs, whatever, I don't know, you want to use trailing stop expert advisor, this is one which I can recommend. It also puts stops to break evens. It can set, remove, target price, stop loss. It has many closeout conditions, okay, many closeout conditions. It's useful for many traders, okay. It can be really, really useful for many traders, be it investment traders or intraday traders. And how you install it, basically. You go to file, you just need to send me an email to get it, okay, guys? My email is tarantuafx@gmail.com. Send me a request and I will give you, I will send you the trailing stop indicator. But I strongly advise you really to use Admiral Market Supreme Edition, because that is what I am using also. So file, open data folder, MQL for experts. This is the path where you should place your expert advisor. So this is the path. File, open data folder, MQL for experts. Then EA prints to the screen what it is allowed to do. You only need one condition, one action, one order type at least. It does not trade, it manages your trades. Okay? This is how it looks like. Okay? You have multiple options here. And I will send you documentation for this if you want to use it, so you can test it also. But you see, you have a lot of different options here. A lot of different options. Okay? So send me a request, you will get Swiss Army Expert Advisor. So guys, this is what I have promised. I will send you Expert Advisor for trailing stop. I also explain how you should use dynamic trailing stop, and I use this with, I personally prefer Admiral Market Supreme. It's easy, it doesn't take a lot of memory. It really doesn't have any memory leakage. It's so it's flowing like a river. It's very good. It doesn't clog up my processor power. It's great. And especially because of this. When I use stop loss, I can select which kind of stop loss I want to take. Well done for this. This is great. And also, guys, I have shown you how you can move your stop loss manually. Okay, this is how I do usually when I trade intraday and I don't see big momentum. Okay, locking in the profit. So guys, I hope that you can make something out of it. As I said, if you're in euro dollar trade, you can lock the profits now. FOMC is closed. And Jen was asking me, what do I expect from FOMC? Okay, what I'm expecting is basically, I don't think that there will be mentioning of some rate hikes in the statement. I think that Fed could be hawkish, and because investors are consolidating now, because August is coming, it could be another leg higher in dollar. So I think that Yellen's statement will not diverge from previous statements, but it should support dollar. Yes, I think that dollar should be supported by this statement. Okay. Lo is saying thank you, Tarantino, for a great webinar as well as for great recaps. Okay, I'm very glad that you made money with it, Lo was saying. And let's see, cable looks like it's resuming uptrend. Yes, it could form a buying, indeed, Jen. Drops could be used for buying, yes. Fed is setting the stage for a possible rate hike in September. I don't know, September or December. But at this point, Jack, it seems they're setting up the stage for a possible rate in December, I think. So we will see September, December. So the thing is, I think dollar can get some love from this today's statement. We will see. But of course, we will see. And yeah, guys, just be patient with trades. Our next session recap will be done on 17th of August because I will be on holiday from next week till 17, and I will be back on 17. So we will review the market, and we will then review everything, guys. At this point now, stick to trading stop. See the logic behind trailing stop, especially, guys, if you use scalping. So this is the way how you can scalp not 10 pips, but you can scalp momentum and take very occasionally 20 pips, okay, from scalp trades. Okay. Jen is saying, thank you, sir. Wish you good holiday. Thank you, Jen. I will be here with you also tomorrow and on Friday, and then holiday, of course. Ayush is saying, thank you very much for webinar. Okay, guys. I advise you to use Admiral Market Supreme Edition. And if you want, you can try this Swiss Army Expert Advisor. Of course, it's free. And I will be here with you soon. So, as always, guys, be very patient and trade safe. Talk soon. Cheers.